Assalamualaikum and good day to our lecturer, Madam Riana binti Abdul Rahim. Today, our group will be presenting the analysis of financial ratio for a well-known Malaysian company, Ajinomoto Berhad, for the year 2023 and 2022, under the subject of DPB50113 Business Finance. Before we begin, let us introduce ourselves. Hi, my name is Atika Hana binti Arun, and my matrix number is 20 DPM 22F1045.
Hi, my name is Gracia Mitra Baisu. My matrix number is 20 DPM 22F1047. Hi, my name is Gracia Mitra Baisu. My matrix number is 20 DPM 22F1047.
My number matrix is 20 DPN 22F1025.
My name is Ajinomoto and my matrix number is 20 DPM 22F and 1009.
So here is the statement of financial position for Ajinomoto Malaysia Berhad for the year 2023 and 2022. And this is a statement for comprehensive income for Ajinomoto Malaysia Berhad for the year 2023 and 2022.
First, we have current ratio. Let's start off with getting to know what current ratio is, how to calculate them, where to find them, and what is the need to achieve satisfactory. So basically, the current ratio is a liquidity ratio that measures a company's ability to pay short-term obligations or those due within 1 year. The formula to calculate current ratio is current asset divided by current liability, and the answer must be in times. The higher amount of current ratio is satisfactory, meanwhile the lower is non-satisfactory. So, where can we find current asset and current liabilities, one might ask? We can find them at the statement of financial position. As you can see highlighted here, those are the total of current asset and current liability. So, where can we find current asset and current liabilities, one might ask? We can find them at the statement of financial position. As you can see highlighted here, those are the total of current asset and current liability. Now, let's get into the calculation. First and foremost, never forget to write down the formula before you start calculating. So, as I showed earlier, refer to the statement of financial position for the amount of current asset and current liabilities. For the year 2023, the current asset amount is 242,235,737. The current liabilities amount is 136 million. Now, do the same for the year. Now that we have the current ratio amounts for both years, let's begin to analyze and compare them. As you can see here, liquidity ratio of Ajinomoto Malaysia Berhad in 2023 is not as satisfactory as that of the year 2022. This is because the current ratio of Ajinomoto Malaysia Berhad for year 2023 is lower than 2022. Therefore, Ajinomoto Malaysia Berhad in year 2023 is unable to pay its short-term obligations.
Hello and hi everyone. So I will continue this presentation, but before that, let me introduce myself first. My name is Ajinomoto and my matrix number is 20 DPM 22F and 1009. So today, I will explain about the fixed asset turnover. The fixed asset turnover measure of a firm efficiency in using its plant and machinery to regenerate goods or products for sales and profit. The higher ratio is preferred as it indicates a firm efficiency in generating sales from the available fixed asset. So which means the higher amount of the fixed asset turnover is satisfactory than the lower amount of the fixed asset turnover. The formula for the fixed asset turnover is sales divided by the fixed asset. The let's move to the next part, and I will show how to calculate the fixed asset turnover of Ajinomoto Malaysia Berhad in the year of 2023 and 2022. Focus on the year of 2023, the amount of sales was 603,746,767. You can get the amount of the sales from comprehensive income, then divide it into the fixed asset, which is 499,743,866. You can get this amount of fixed assets from the financial position, then the answer will be 1.21. So next move to the year of 2022. The amount of sales in 2022 was 484,677,544. Divide it into the 497,404,622, then the answer will be 1.04. As you can see from the table shows analysis fixed asset turnover of Ajinomoto Malaysia Berhad in the year of 2022 and 2023. Efficiency ratio of Ajinomoto Malaysia Berhad in 2023 is satisfactory than 2022. This is because the fixed asset turnover of Ajinomoto Malaysia Berhad for the year 2023 is higher than 2022. Therefore, Ajinomoto Malaysia Berhad in year 2023 was efficiency in generating sales from the available fixed assets.
I want to explain the debt ratio before we start. Debt ratio is leverage ratio measure the level of debt or borrowing in the firm. Next, in this case, the amount of debt in the firm financial structure. The formula to debt ratio is total liabilities divided by total asset. In debt ratio, lower is satisfactory and higher is not satisfactory. First, I'm using the financial position table to get the information. The total asset in 2023 is 741,979,603 and 2022 is 731,015,585. Other than that, the information is that total liabilities in 2023 is 213,013,819 and 2022 is 225,029,107. The formula for debt ratio is total liabilities over total asset. Debt ratio for the year 2023 is 213,013,819 per 741,979,603 and the answer is 0.29. It need to multiply 100%. The answer is 29%. Next question is the ratio for the year 2022 is 225,029,107 over 731,015,585 and the answer is 0.31. It need to be multiplied by 100% and the answer is 31%. I want to explain the analysis debt ratio Ajinomoto Malaysia Berhad 2023 and 2022 year. Leverage ratio of Ajinomoto Malaysia Berhad in 2023 is satisfactory than in 2022. This is because debt ratio of Ajinomoto Malaysia Berhad for year 2023 is lower than 2022. Therefore, the level of debt from the Ajinomoto Malaysia Berhad in year 2023 is not risky. That's from me. Thank you.
Now, let's talk about net profit margin. Net profit margin is a profitability ratio that measures how effectively the firm uses its asset to make profit. The formula for net profit margin is net income over sale, and the end of the answer must be in percentage. Higher is satisfactory, and lower is not satisfactory. Now, to find the total for net income and the total of sale, we can find both of these in the statement of comprehensive income. Now, for the calculation of net profit margin, the formula is net income over sale. For 2023, the net income is 27491,461 over sale, which is 603,746,767 equal to 0.05 times with 100 equal to 5%. For 2022, the net income is 16,996,225 over sale 484,677,574 equal to 0.04 times with 100 equal to 4%. And finally, after all the calculation for net profit margin, Ajinomoto Malaysia Berhad 2023 and 2022, I made a table here so it's much more clear which one is the highest and which one is the lowest. We found out that profitability ratio of Ajinomoto Malaysia Berhad in 2023 is satisfactory than in 2022. This is because the net profit margin of Ajinomoto Malaysia Berhad for the year 2023 is higher than 2022. Therefore, Ajinomoto Malaysia Berhad in the year of 2023 indicates ability of a firm